Good evening, everyone. This is Henry Gambell with simpleroptions.com, and in tonight's free video I wanted to share a couple of the differences that I see in Disney versus Win. Now, Disney came up for me last week in the chat also because it's a common name. A lot of people like looking at Disney. There's some good liquidity here, so fair enough, it makes sense to look for a trade. I also like looking for stocks that revolve around, quarter point levels are great, like SPX 2250 or anything like that, or stocks that revolve around 100. Now, 110 is to a lesser degree, but it still makes sense to see if you can get the stock to bounce around at these prices. Now, I thought that Disney was a little bit of a tricky trade because I like the idea of being long. We are clearly above all of our broad moving averages, and that is a nice representation of a good bullish trend. However, the stock has come a long way in a relatively short period of time, and these voodoo lines are a key part of the way I like to analyze a chart, and these usually give me a good area to pause. So a lot of different reasons that I thought the stock might sit around 110. However, when I came over to my options chain, this is where it makes it a little bit more difficult to actually want to set this up. It's one thing to have a chart that cooperates and gives you a couple of ideas, but then you also need to see an options chain that will allow you to work around it. So if I'm thinking of playing this neutral or maybe a tiny bit bearish, you can see the call option that's 35 cents out of the money is going for about 45 cents. There's also a lot of volume in here, so, probably somebody else thinking in a similar way. But when we look at the lack of implied volatility and how that 110 call is just not all that juicy, I felt like that was a nice contrast when you come back over and look at Win. Now, Win fits the bill because we're trading close to 100, and also when you look at this chart, Disney is clearly bullish, and it's been doing pretty well. When you come back and look at Win, this is much more indecisive, and a great place, I think, in general, to sell more premium because the trend is not nearly as decisive. You could argue it a little bit to the bullish side, but I think the idea is pretty clear here. Also notice that when you come over and you look at the options that are just out of the money in this case, even though the stock is cheaper, these options are still trading at a much better premium. So I think that gives you a lot of good reasons to look at the potential of trading Win as opposed to Disney into options expiration. Okay, now which trade do we put on? There's two ways of looking at it. I'm going to wait and see if I can get a move up into 100 that will fill this gap, and then at that point I'm going to look to put on a butterfly that will use a short $100 call. If you don't get the move and instead you would prefer to just put something on right this second, I think looking at the short 99 straddle, and of course if you don't like short straddles, use the short straddle from here, come back out and buy yourself some protection to create the iron fly, and that is a great way to look at Disney Disney and Win over the course of the next 4 days. So I hope you find that comparison helpful. One other thing, that if things like that off of a short-term basis interest you, I think that you will also get a lot of benefit out of the class that Bruce has coming up. So he's going to be doing a completely free webinar on Wednesday. That's this Wednesday, February 15th at 7 p.m. Central Time. I've learned so much from Bruce in the way of, applying these butterflies, places to look for them, and little tips and tricks along the way. And I think you'll find this a very helpful addition to your trading as well. Remember, that class on Wednesday is completely free, and if that interests you, I hope to see you there. Y'all have a great night, and I'll touch base at the next free video.